Good evening.
Well, let's head straight to the market action. A rally in the second half of the day led to another strong session for the bulls. The Nifty ending above 11,500 and the Sensex holding strong above 38,300. Both those indices ended over 0.5% higher. The mid-caps rejoined the party to rise in line with the benchmarks and the index ended close to 1% higher. The Nifty Bank mirrored this and is now up more than 2,000 points in only 7 trading sessions. So strong momentum continuing for the markets. But the top story tonight, there is no resolution. More aircraft are being grounded and now there is an ultimatum from pilots. It is a heady cocktail of trouble for debt-ridden Jet Airways as the airline struggles to stay afloat. Now here are the crucial developments that have taken place today. The stalemate between Etihad and Naresh Goyal of the resolution plan continues. In fact, we now learn that Etihad has even proposed exiting the airline. That's not all. Jet Airways Pilots Union has threatened to stop flying from the 1st of April unless the airline signs a letter of intent for the payment of pending salaries. The government is keeping a close eye on the developments with the elections looming large. A Reuters report claims that the centre has asked public sector banks to save Jet Airways from bankruptcy. Ritu Singh and Anu Sharma join us now with more. Ritu, to you first. Tell us more about the impasse between Etihad and Jet. Is this just a case of Etihad flexing its muscles, or have the negotiations reached a point of no return where Etihad may even consider exiting?
Well, time is running out for Jet Airways and therefore its lenders will be meeting this evening to consider what can be done to break this impasse, with both Etihad Airways and Jet promoter Naresh Goyal unwilling to come to an agreement over the terms of the Memorandum of Understanding. We've been reporting that Etihad Airways is not willing to consider some of these offers that have been proposed by Jet in the MOU, specifically with regards to the board position that Naresh Goyal wants to take, or the fact that he does not want to cap his stake at 22% for perpetuity. Both of the things that Etihad is not willing to consider at this point of time, and therefore with no resolution between these two partners, Etihad has made its stance very clear that it will not invest any further in Jet Airways unless these differences are resolved. We're given to understand that matters have come to a point where Etihad has even conveyed to the lenders that if it comes to that, it is even okay to exit Jet Airways at the initial proposed share price of 150 per share if no agreement is reached between the lenders. But of course, the bigger question is who will buy Etihad's stake at this point of time, and therefore lenders will have to consider the next options and continue negotiations with both the parties. There will be a meeting this evening and hopefully lenders will decide what course of action to take forward, because NCLT is a route that lenders are keen to avoid, given that it may lead to cancellations of the agreements and the contracts that Jet Airways currently has, and therefore create more problems, and therefore lenders will have to sit down and deliberate on how to take things forward for Jet Airways.
Well, absolutely, Ritu. Thanks very much for that. But let's go across to Anu now. Anu, Jet's Pilots Union met today. They've issued an ultimatum to the airline, miffed over the delay in salary payments. We understand that over 200 pilots marched to the airline's Andheri office. So what is the situation now, Anu? They're refusing to fly come the 1st of April?
That's right. The crisis at Jet Airways has reached the cockpit now. The pilots have said that they will stop flying from April 1st unless the company signs a letter of intent regarding payment of the pending salaries or brings money for the airline survival. Remember, salaries of pilots are pending since December, and a few days ago, the pilot union body of Jet Airways, the National Aviators Guild, had written to the government and the DGCA seeking their immediate intervention. They had also told the government that the situation is not an ideal one for the pilots in the cockpit, and all their pleas to the management on the matter have fallen on deaf ears. So clearly it is really a sad state of affairs at Jet Airways, with DGCA confirming today that the airline is flying just 41 planes, or around 34% of its fleet, at 140 flights a day, a sharp reduction from what used to be around 600 flights earlier. In fact, DGCA has also warned that the fleet size may decline further in the coming weeks. As we speak, around 200 pilots have gathered at the Jet Airways office in Mumbai, and the CEO Vinay Dubey is flying from Delhi to Mumbai to address them. That is expected to happen around 10:30 p.m. tonight, and we will keep tracking that space for more. But here's what Karan Chopra, the president of the National Aviators Guild, had to tell us.
Management is trying the level best to get a resolution plan in place, and they are very hopeful that in this month itself we will have a resolution concrete plan in place, and they were very hopeful that pilots' salaries also could be paid off once this concrete resolution plan is put in place. So we are very hopeful that during this month it will be successful. However, if it is not successful for some reason, then pilots have taken a collective call that from 1st of April onwards, without salary, they would not be flying aeroplanes.
Well, that is the National Aviators Guild, the pilot union of Jet Airways, saying that they have been told by the management that they hope to be given at least a letter of intent on payment that is pending to pilots by the end of this month. Otherwise, pilots have threatened to stop flying from the 1st of April. So remember, this is a precarious situation with Etihad now threatening to walk out. Jet will need to either find the money, find an investor, or lenders are going to have to come to the rescue, which is what seems to be the suggestion at this point in time. Now, the other big corporate story of the day, it was a day of high drama in the Indian IT industry. L&T has pressed the pedal to mount a hostile acquisition of Mindtree against the wishes of Mindtree's promoters. L&T has completed the first step of what is likely to be a three-part takeover. So it's bought just over 20% stake from the founder of Cafe Coffee Day and early investor in Mindtree, VG Siddhartha. L&T plans to take its shareholding of over 66% through an open offer and open market purchases. This was announced late last night. Today, the L&T top brass held a press conference to justify their decision. L&T maintains that there is no hostility and that this is a transaction being done straight from the heart. They've also left the doors open to negotiate with Mindtree's promoters once again. But the Mindtree promoters in no mood to budge. In a press conference this afternoon, they hit back at L&T, calling the hostile takeover an attempt as grave threat and one that could lead to value destruction. Mindtree's promoters claimed that they are hopeful of getting support from domestic and institutional investors. Take a look at the back and forth between the top managements of L&T and Mindtree.
Obviously, when a promoter founders over a period of time find that one of the important promoters or initial investors moves out and wants to place his stakeholding in another house or in another matter, there are certain emotionalities and trepidations involved. That's visible as we see it. But business is business. Emotions do play a part, but emotionalities have to be overcome as we go forward.
You have chosen to mount the first ever hostile takeover in the 50-year-old unblemished Indian IT industry. If you persist in what you are doing, you will forever be remembered for this. Is this how you want to set an example?
What we are trying to do is with, if I can use the word, pyar. And we will continue to look at it as something which we are doing from our dil. And we would like an intent to take it forward in the same manner and purpose.
This is a people business. Mindtree minds have signed up for a mission, not just a salary. Take their mission away and they will go. What will you be left with?
The battle between L&T and Mindtree, but it looks unlikely that there is going to be an attempt on the part of Mindtree's founders to try and come up with a parallel offer. The L&T offer looks like it is likely to go through, but there is a crucial board meeting of Mindtree tomorrow, so we will keep you updated on those developments. Now, the National Company Law Appellate Tribunal has told the Reserve Bank that it cannot allow bad loan tags for the IL&FS group companies which fall under the amber category. The Appellate Tribunal had also warned the central bank against turning the NPA classification issue into an ego battle. The NCLAT was hearing the RBI plea seeking the modification of the order which restrains banks from classifying some IL&FS group companies as NPAs. Ashmit joins us now with more on this. Ashmit, what exactly is this about? Why is the NCLAT upset with the Reserve Bank?
Right, so a big tussle this between the RBI and the NCLAT over the regulation of the banking entities and the classification of accounts as NPAs, especially with respect to the IL&FS account. Now, the RBI is clearly unhappy with the NCLAT order of February 11th. That is the order under which the NCLAT had clearly provided that none of the IL&FS entities can be classified as an NPA account by none of the lenders. Now, the RBI's grouse with that is, and that's the grounds for their challenge before the NCLAT as well, that as far as the classification of accounts is concerned, it rests. The final word burden that rests with the RBI. They are the regulator, they are the sectoral regulators, that their norms that they've laid down for classification of accounts as NPAs falls squarely under the RBI Act, falls squarely under the Banking Regulations Act, and are constitutionally valid and should not be altered with, should not be interfered with by the NCLAT. Now, in response, the NCLAT had some very sharp words. They observed that this should not be turned into a prestige issue by the RBI. Further, the NCLAT added that the aggrieved lenders don't seem to have a problem, but the RBI is raising concerns before us. And finally, also went on to say that as far as RBI is concerned, their powers should be focused more on the resolution of accounts rather than classification of these accounts as NPAs. With that, the NCLAT has held that they don't have a problem with green or the red entities of the IL&FS group being pushed into the NPA bracket if they default, but the amber companies is something that the NCLAT will refuse to relent on. So clearly an issue that will require further deliberation, this tussle between the sectoral regulator and the appellate tribunal. The next hearing in this case, we understand, is on March 29th. Back to you.
Welcome back. The Election Commission has clarified that no new beneficiaries can be added under the PM Kisan scheme post the Model Code of Conduct coming into effect. We are given to understand that in light of the clarification coming in from the EC, a large chunk of the 20,000 crore rupees allocated for the cash transfer scheme for this current fiscal may in fact remain unused. Sapna Das joins us now with more. So Sapna, no new beneficiaries can avail of the PM Kisan scheme. What does this mean in terms of the usage of funds of what was allocated for this fiscal?
Well, this is something that we have reported earlier as well, but there is much more clarity now available from Election Commission sources. Sources indicating to CNBC-TV18 very clearly that they have indeed communicated to the Agriculture Ministry that no new beneficiaries will be permissible under the ongoing PM Kisan scheme. 10th March is being treated as a cutoff for all those farmers who have already been identified and the payments have been made. Clearly what EC is saying is that new beneficiaries means farmers which have not yet been identified and paid. The universe as of 10th of March from the Agriculture Ministry side data is as follows. 2.75 crore farmers have been paid approximately 5,600 odd crores from a budget allocation of 20,000 crores for FY19. And if this is where the cutoff will remain, then the government will end up with a huge savings of around 13 to 14 odd thousand crores, which will remain unutilized in the PM Kisan budget allocation for FY19 because the Model Code of Conduct has kicked in. But there's a second set of data that the Agriculture Ministry is looking at very closely. 2 crore further names had been sent by states, but due to technical errors, the money could not get transferred by 10th of March. Those names have now gone back to the states for rectification, and once that process is over, probably the Agriculture Ministry may wait for further, nod or further clarity from the EC as to what needs to be done on that front, because that, appears to be a bit of a grey area. Otherwise, the buck will stop at 2.75 crore odd farmers getting the first installment of PM Kisan by 10th March, approximately 5,600 crores that has been used from a fund of 20,000 odd crores for FY19.
Okay, that's the latest as far as the PM Kisan scheme is concerned and the Election Commission's clarification. But the government has also paused new LPG enrollments under the Ujjwala scheme after the imposition of the Model Code of Conduct. Sources say the oil marketing companies have sought clarity from the centre on the allocation of new fuel dealerships. Anshu joins us now with more. Anshu, what are you picking up?
With Model Code of Conduct in place, we learn new enrollment for LPG connection under Ujjwala will pause till a new government is formed. So far, 7.15 crore beneficiaries have been added. The target is of 8 crore LPG connections under Ujjwala by 2020. We also understand that about 20 lakh enrollments of beneficiaries under Ujjwala are at various stages. On the other hand, we learn from sources that oil marketing companies have sought clarity from Oil Ministry whether award of fuel retail dealership can continue since Model Code of Conduct has already kicked in. Remember, oil marketing companies advertise 78,000 locations for fuel retail dealership across India. We understand that of 78,000 locations advertised, about 76,000 bids have been received. About 20,000 single bids have already been identified by the oil marketing companies. 11,800 dealerships have been awarded via lucky draw, which means about 44,000 bids are yet to be ascertained by the oil marketing companies. Government so far has given about 4,800 letter of intent to the bidders for fuel retail dealership. Considering dealership award is a process undertaken by the oil marketing companies, Oil Ministry may ask the companies to seek clarity from Election Commission on dealership award. Back to you.
All right, Anshu, appreciate you joining us. This is going to impact many schemes where if new beneficiaries have been identified after the Model Code of Conduct kicked in, which is on the 10th of March, then they will not be eligible. But if the beneficiaries were identified before, but the transfers haven't happened, as in the case of the PM Kisan, then that is going to be a matter that the Election Commission will have to clarify or give its nod on. Now, after slashing GST rates on under-construction projects and affordable housing in the last meeting, the GST Council today approved the transition plan for the new rates for residential property. The revised GST rates will now be mandatory for new projects from the 1st of April, but the Council is yet to discuss the time limit for the transition with states. And as CNBC-TV18 has been reporting, developers will have the option to switch to new GST rates for projects that are under construction as of the 31st of March. The switch to new rates will mean proportionate reversal of input tax credit in terms of flat prices. The Council mentioned it should not go up, else they will have to invoke anti-profiteering norms. Incidentally, this is going to be the last meeting of the GST Council till the elections are over and done with. A 4-story under-construction building has collapsed in Karnataka's Dharwad district, resulting in the death of 2 people. Around 50 are believed to be trapped in the debris. The incident took place in Kumareshwaram Nagar, which is about 400 kilometers north of Bengaluru. Well, with that, it is time for us to wrap up this edition of What's Up. Thanks for watching. Up next, we shift our focus to the Lal Street. The Sensex and the Nifty gaining for the 7th straight session and hitting fresh 6-month highs. Markets Today Talkback takes the action forward. We'll see you again on India Business Hour with the day's top stories.